There's a pattern in housing markets that has destroyed the middle class in three major economies over the last 400 years. Each time it struck, families who spent decades building wealth watched it evaporate, and it's happening again right now. Right now, in 2025, the American housing market is following that exact same pattern, inflated, leveraged, and teetering on the edge like a house of cards in a hurricane. With median home prices at 8 times median income and mortgage rates crushing affordability, we're watching history repeat itself in real time. In 1640, Spain's property bubble burst after 80 years of false wealth built on New World gold. Within 2 decades, 90% of Spanish families lost their homes. The nobility consolidated everything. In 1929, Britain's housing market collapsed after 40 years of speculation fueled by imperial riches. Within 5 years, the middle class was eviscerated. Working families who thought property was their ticket to prosperity found themselves on the street. In 1990, Japan's real estate bubble popped after just 20 years of export-driven prosperity. In less than 900 days, ordinary families lost everything. 3 generations of savings, gone. Notice the pattern? Each collapse happened twice as fast as the previous one. Spain took 80 years to build and destroy its bubble. Britain compressed it to 40, Japan to 20. The pattern is accelerating. And here's what should terrify every homeowner and renter in America. We've already completed 5 of the 7 stages that preceded each collapse. The same sequence that destroyed middle-class wealth in Spain, Britain, and Japan is playing out right now in your neighborhood. This is the story of how housing bubbles systematically transfer wealth from the middle class to the ultra-wealthy. Why governments can't stop it even when they see it coming, and why the next 24 months will determine whether you keep your home. Because if history is any guide, and it has been 3 times before, we're about to witness the fastest wealth destruction in modern history. Before we examine each collapse, you need to understand the pattern. Every housing bubble follows these 7 stages. Stage 1. The golden flood. External wealth floods the market faster than supply can adjust. Prices rise. Everyone celebrates. Stage 2. The speculation fever. Asset prices detach from reality. Multiple offers, waived inspections, blind bidding wars become normal. Stage 3. The affordability crisis. The middle class gets priced out. Only the wealthy can participate. Price-to-income ratios exceed 6 times. Stage 4. The debt trap. Borrowing becomes necessary for basic housing. Creative financing emerges. Debt-to-income ratios hit records. Stage 5. The false peak. Final euphoric surge before collapse. Record sales despite the affordability crisis. Media celebrates permanent prosperity. Stage 6. The catalyst event. External shock exposes fundamental weakness. Rate hikes, job losses, or credit events trigger selling. Stage 7. The avalanche. Cascading collapse destroys middle-class wealth. 30 to 50% price drops. Mass displacement. Wealth concentration. Spain, Britain, and Japan all followed this exact sequence. Now, let me prove it. Let's start with Spain in 1560, the wealthiest nation on earth. Spanish galleons delivered 180 tons of gold and 7,500 tons of silver annually from Potosí and Mexico. This unprecedented wealth should have created lasting prosperity. Instead, it created a property bubble that would destroy the Spanish middle class. By 1600, property prices in Madrid, Seville, and Toledo had risen 500%. Construction boomed. New palaces lined every major street. The Spanish believed their American treasure made property the ultimate store of wealth. They were building monuments to their own destruction. But beneath the golden surface, the property market was rotting. The flood of silver was devaluing currency. Inflation ate away at wages, while property prices soared. What looked like wealth creation was actually wealth concentration. The stage was set for one of history's most devastating property collapses. This is stage 1 of every housing collapse, the Golden Flood. Starting with Philip II's coronation in 1556, Spanish treasure fleets delivered more wealth than Europe had ever seen. The 1571 Potosí Silver Mountain Peak alone produced more precious metal than all of Europe's mines combined. This flood of money needed somewhere to go. With currency devaluing 10% annually by 1580, property seemed the only safe store of value. Madrid property prices doubled between 1560 and 1580. Seville saw 300% increases. Toledo construction permits exploded from 50 annually to over 500. Transaction volumes in Madrid's property market increased tenfold. Everyone, from nobles to merchants, rushed to convert devaluing silver into permanent property wealth. The money supply increased 400%, while housing supply grew only 50%. Property seemed the only safe store of value. That was the trap. The golden flood that made Spain rich was silently destroying its economic foundation. Stage 2. The speculation fever hit Spain like a plague. By 1590, property wasn't just shelter or status, it was the primary speculation vehicle. Noble families competed to own the most properties. The Duke of Medina Sidonia owned over 1,000 properties by 1595, most sitting empty. Merchants abandoned productive trade to flip properties. Why risk ships and cargo when a building in Seville could double in value in 3 years? The church, supposedly above material concerns, became Spain's largest property speculator, owning 20% of urban real estate by 1600. Here's what historians discovered in the Simancas archives. Property transactions in major cities increased 2,000% between 1560 and 1600. Most buyers never intended to live in or rent their purchases. They were hoarding, waiting for prices to rise further. Empty palaces dotted Madrid, while working families crowded into slums. Productive investment disappeared. Spain was consuming itself through property speculation. Everyone believed property could only increase in value. Everyone was wrong. Stage 3 arrived by 1600. The affordability crisis. While property values had risen 500%, wages for skilled workers remained flat. A master craftsman in Madrid, earning 4 reales daily, faced properties costing 400,000 reales, 100,000 days of labor for basic housing. The displacement was massive. Working families fled cities they'd inhabited for generations. Madrid's slums exploded as multiple families crowded into single rooms. Seville recorded 50,000 homeless by 1605 in a city of 150,000. The merchant class, once the backbone of Spanish prosperity, couldn't afford property in cities where they conducted business. They rented from nobles at extortionate rates, transferring their profits upward. The productive middle class was being systematically excluded from property ownership. Birth rates plummeted in cities as young families couldn't afford space for children. Spain was literally failing to reproduce itself. The middle class, artisans, merchants, skilled workers, were being erased from urban centers that depended on their labor. Stage 4. The debt trap that would destroy Spain. By 1610, desperate families turned to censo contracts, Spain's version of mortgages. These perpetual loans carried 7% interest and could pass to children and grandchildren. Default meant losing everything. Genoese bankers flooded Spain with easy credit. They knew property values were unsustainable, but profited from origination fees and eventual foreclosures. The church became a major lender, offering censos against future salvation, pay now or pay in the afterlife. By 1615, census records show 60% of urban properties carried censo debt. Default rates reached 15% annually by 1618. Families borrowed against already mortgaged properties, creating layers of unsustainable debt. The truly insidious part? Censo contracts contained acceleration clauses. Miss one payment and the entire multi-generational debt became due immediately. Spanish families were now slaves to property debt, working solely to service loans they could never repay. Stage 5. The false peak arrived in 1620. Despite visible distress signals, rural depopulation, manufacturing collapse, treasury deficits, property sales hit record highs. Philip IV's court celebrated Spain's permanent prosperity. Noble families threw lavish parties in their empty palaces. The financial elite knew collapse was coming but kept buying, believing they could sell to greater fools. Property changed hands faster than ever, sometimes multiple times per year. Madrid recorded its highest transaction volume in 1624, just as Spain's real economy crumbled. Warning signs were everywhere. Spanish manufacturing had virtually disappeared, unable to compete with property returns. Agricultural output plummeted as workers fled to cities chasing property wealth. The empire that conquered the Americas couldn't feed itself. Stage 6. The catalyst event struck in 1627. The Castilian currency devaluation wiped out 50% of monetary value overnight. Suddenly, those censo payments became impossible. Trade route disruptions and Dutch naval victories cut treasure flows. The golden flood stopped, The first major defaults hit Madrid's property market within months. Panic selling began as owners tried to escape before prices collapsed. But there were no buyers with real money, only speculators with worthless paper. Stage 7. The avalanche from 1628 to 1640 was total. Property values fell 70% in major cities. Mass foreclosures swept through every neighborhood. The Genoese bankers and church foreclosed on thousands of properties, concentrating ownership in fewer hands. 50,000 families lost homes in Madrid alone by 1640. Entire neighborhoods stood empty. Construction projects abandoned, half complete, became monuments to collapsed dreams. The middle class that had built Spain's golden age was destroyed. By 1650, the top 2% owned 76% of urban property. The nobles who survived with land-based wealth bought distressed properties for pennies. Spain had transferred an entire nation's wealth from productive middle classes to parasitic elites through property speculation. Spain proved property bubbles don't create wealth, they concentrate it. The pattern was complete. Golden flood, speculation, fever, affordability crisis, debt trap, false peak, catalyst, avalanche. The Spanish middle class never recovered. Fast forward 260 years to Britain in 1890. The pattern would repeat, but compressed into half the time. This time, the golden flood came from the empire that ruled a quarter of the world. And the middle class would pay the same price. Let's examine Britain at its imperial peak, 1890. The British Empire controlled 25% of global land and ruled 400 million subjects. Wealth flowed from Indian tax revenues, African gold and diamonds, and Chinese trade into London's banks. This imperial treasure needed investment, and property seemed the safest bet. London property values rose 400% from 1870 to 1920, but the capital wasn't alone. Manchester, Birmingham, and Liverpool all experienced massive property bubbles. Railway expansion created suburban speculation opportunities. The middle class, enriched by imperial trade, rushed to become property owners. Building societies, Britain's mortgage innovation, made property accessible to clerks and shopkeepers. What had been an aristocratic privilege became a middle-class obsession. Everyone from factory foremen to bank tellers leveraged themselves to join the property-owning classes. But the same 7 stages were already in motion. The British believed their empire made them immune to Spain's fate. They had learned nothing from history. Stage 1. The Golden Flood, but this time from India, Africa, and global trade. Between 1870 and 1890, colonial extraction delivered unprecedented wealth. India alone provided £100 million annually in tax revenues. African diamonds and gold added another 50 million. This imperial wealth flowed through London banks into property investment. Mortgage lending expanded 600% between 1870 and 1890. Railway companies, flush with capital, developed suburban properties along their lines. Every new station sparked a development boom. Capital inflows from the empire reached £200 million annually by 1890. Property seemed the natural destination, tangible, prestigious, and ever-appreciating. London's West End saw values triple. Manchester's warehouse district quadrupled. Building societies proliferated, growing from 2,000 in 1870 to over 6,000 by 1890. They collected savings from working families and lent for property purchases, creating a democratic property boom. The golden flood had arrived. Stage 2. Speculation fever. But worse than Spain because more people could participate. Building societies enabled middle-class speculation. A clerk earning £150 annually could borrow £500 for property. Leverage ratios reached dangerous levels. Suburban development schemes promised garden cities for the middle class. Developers bought farmland for £100 per acre and sold building plots for £1,000. Everyone wanted in on the property game. The Bank of England's hidden records reveal the mania's extent. Property-related lending grew from 15% of bank assets in 1880 to 45% by 1910. London's West End saw bidding wars where properties sold for 50% above asking prices. Manchester warehouses changed hands monthly as speculators flipped them. Even clerks were borrowing to become property speculators. Teachers, shopkeepers, and civil servants formed investment clubs to buy properties together. The fever had infected every level of society. Britain was about to learn Spain's lesson. Stage 3 hit Britain by 1910. The affordability crisis was brutal. While Mayfair mansions sold for record prices, Working families crowded into slums. London's East End packed 8 people per room, while West End properties sat empty, owned by speculators. Rent strikes erupted in 1911 as working families paid 50% of wages for substandard housing. The middle class stretched increasingly to maintain property-owning status. Building society records show average loan-to-income ratios reached 5-to-1 by 1913, unprecedented levels. The social cost was severe. Birth rates fell as families couldn't afford space for children. Overcrowding led to disease outbreaks. The imperial capital that ruled the world couldn't house its own workers. Middle-class families took second jobs to afford mortgage payments. Women entered the workforce not for liberation, but from necessity. Dual incomes became required for property ownership. The property ladder was pulling away from ordinary Britons. Stage 4. The debt trap was more sophisticated than Spain's censo system. Building societies offered attractive initial rates that reset higher. Second, mortgages became common, as families borrowed against equity for living expenses. The interlocking nature of building society lending created systemic risk. Societies lent to each other, creating chains of obligation. When one failed, others followed. By 1913, early distress signs appeared. Missed payments rose 300%. Innovative products emerged. Interest-only loans, balloon payments, even early versions of adjustable rates. Families didn't understand the risks. They believed property values would rise forever, making refinancing easy. Building society assets reached £75 million by 1914, mostly in property loans. The entire middle class was leveraged on property values. A Bank of England report warned of systemic risk but was ignored. The empire's wealth had created a debt trap that would destroy the empire's own people. Stage 5. The false peak came after World War I. The 1925 to 1928 period saw record building society deposits despite economic warnings. Government propaganda promoted homes fit for heroes for returning soldiers. Property sales hit all-time highs in 1928. The financial establishment knew trouble was coming. Bank of England minutes from 1928 show private concerns about property valuations, but publicly they promoted confidence. The media celebrated Britain's property resilience. Building societies advertised aggressively, promising easy terms and permanent appreciation. Middle-class families who had survived the war rushed to secure their piece of British property. It was the last chance to buy before the avalanche. Stage 6. The catalyst event was the 1929 Wall Street crash. Within days, London property markets froze. International capital fled British property. Building society deposits reversed as savers demanded cash. The first building society runs began in November 1929. The Halifax reported £2 million in withdrawals in 1 week. Property transactions stopped as buyers vanished. Sellers, desperate for liquidity, cut prices 10%, then 20%, then more. Stage 7. The avalanche from 1930 to 1933 was faster than Spain's. Property values collapsed 45% in just 36 months. Building societies failed in cascades. 300 closed by 1933. Middle-class savings evaporated overnight. 200,000 families lost homes to foreclosure. Entire suburban developments stood empty. The garden cities became ghost towns. Building society depositors lost £30 million. Lifetime savings gone. The aristocracy, with diversified wealth, bought distressed properties cheaply. By 1935, property ownership concentrated dramatically. The top 5% owned 65% of British property value, up from 40% in 1920. The speed shocked everyone. Spain's collapse took 12 years. Britain's took 3. The acceleration was undeniable. Modern finance hadn't prevented the pattern. It accelerated it. Empire wealth created a property bubble that destroyed the empire's own people. The pattern had compressed from 80 years to 40, the collapse from 12 years to 3. Britain's middle class was eviscerated by the very prosperity they thought would save them. Now jump to Japan, 1970. The pattern would compress to just 20 years total, from economic miracle to property nightmare in 1 generation. The fastest collapse yet was about to unfold. Finally, let's examine Japan's economic miracle turned property nightmare. By 1970, Japan had become the world's second-largest economy through manufacturing dominance. Export revenues flooded home, seeking investment. Property became the destination for this new wealth. The insanity peaked when Tokyo's Imperial Palace grounds 3.4 square kilometers, were valued higher than all the land in California. Office buildings sold for 100 times annual rental income. Golf club memberships traded like securities, sometimes exceeding nearby property values. Corporate Japan drove the speculation. Companies earned more from property investment than core businesses. Banks lent against land collateral, assuming values only rose. The salaryman dreamed of property wealth while working 80-hour weeks. But Japan would complete all 7 stages in just 20 years, twice as fast as Britain, 4 times faster than Spain. The compression would make the collapse more violent. Modern technology and finance, rather than preventing the pattern, would accelerate it beyond historical precedent. Stage 1. The Golden Flood came from dominating global manufacturing. Japan's trade surplus reached $50 billion annually by 1985. Electronics, automobiles, and steel exports generated rivers of cash seeking domestic investment. The 1985 Plaza Accord forced yen appreciation, making Japanese assets more valuable internationally. This attracted foreign investment while encouraging domestic property speculation. Money supply grew 50% in 5 years. Corporate cash hoarding in real estate became standard practice. Toyota, Sony, and Mitsubishi all built massive property portfolios. Banks eagerly financed purchases, accepting land as collateral for loans to buy more land. Between 1985 and 1990, property-related lending exploded from 50 trillion yen to 150 trillion yen. Tokyo land values increased 300%. Osaka commercial property quadrupled. The golden flood of export wealth had found its home in Japanese soil. Stage 2. The speculation fever, from 1980 to 1985, infected every level of society. The salaryman who saved religiously began borrowing to buy investment properties. Housewives formed investment clubs. Taxi drivers gave property tips. Corporate land banking reached absurd levels. Companies bought properties with no intention of development, just to park cash. Golf club memberships became investment vehicles. Some reached 400 million yen, $3 million, by 1989. NTT shares privatization in 1987 created instant wealth for millions. That cash flowed directly into property. Everyone believed Japan would surpass America economically, making property invaluable. The fever had reached pandemic levels. Stage 3. The affordability crisis, from 1985 to 1988, destroyed young families' dreams. Tokyo workers accepted 3-hour commutes because city properties cost 20 times annual salaries. The birth rate plummeted as couples couldn't afford family-sized homes. Financial innovation made the impossible seem possible. 100-year mortgages appeared, passing debt to children and grandchildren. 3-generation loans became normal. Parents co-signed loans they knew their children couldn't repay alone. By 1988, Tokyo property cost 15 times average income versus 3 times historically. Young workers lived in capsule hotels or manga cafes, unable to afford even studio apartments. The nation that had rebuilt from war rubble couldn't house its own children. Stage 4. The debt trap, from 1988 to 1989, saw property loans reach 200% of GDP. Banks competed to lend, offering 120% financing, extra cash for furnishings and fees. Loan officers had quotas to meet, due diligence disappeared. The Yakuza entered real estate, using intimidation to acquire properties, and laundering money through transactions. Shadow banking, the Jusen, provided loans banks wouldn't touch. Total property debt became unmeasurable. Risk had vanished from calculations. Banks assumed property collateral made all loans safe. Borrowers assumed rising values made repayment inevitable through refinancing. Everyone assumed the music would never stop. Stage 5. The false peak, from January to November 1990, saw maximum delusion. The Nikkei hit 39,000. Property prices reached astronomical levels. Media proclaimed Japan would buy the world, and many believed it. Mitsubishi Estate bought Rockefeller Center. Japanese investors acquired Pebble Beach. These trophy purchases symbolized Japan's property dominance. Government officials celebrated permanent prosperity, declaring traditional economics obsolete. Warning signs flashed everywhere. Property prices had detached from any rational metric. Rental yields fell below 1%. Companies earned more from property than products, but the final surge continued. November 1990 saw record property transactions. Stage 6. The catalyst event came December 1990. The Bank of Japan, worried about inflation, raised rates from 2.5% to 6%. The Finance Ministry restricted property lending. Within days, the first major developer, EIE International, declared bankruptcy. The psychological shift was instant. The unstoppable Japanese property market had stopped. Sellers appeared, but buyers vanished. Transaction volume fell 60% in January 1991. Banks suddenly discovered risk existed. Stage 7. The avalanche from 1991 to 1993 defied all precedent. Property values fell 60% in 900 days. The Nikkei crashed from 39,000 to 15,000. Corporate balance sheets imploded as property assets evaporated. Zombie companies emerged, technically insolvent, but kept alive by banks afraid to recognize losses. Middle-class families saw lifetime savings disappear. The three-generation mortgages became three-generation debt prisons. Mass bankruptcies followed. Property developers failed daily. Banks merged or collapsed. The Jusen shadow banking system required government bailout. Organized crime, property empires crumbled, leading to violent turf wars. By 1993, commercial property had fallen 70% from peak. Residential fell 40 to 50%. Golf memberships became worthless. The salaryman who had saved for decades found his net worth negative. Retirement dreams evaporated. The speed was breathtaking. 900 days to destroy 2 decades of wealth. Japan entered its lost decade, which became lost decades. Property values in 2025 remain below 1990 peaks. An entire generation has never seen property appreciation. The human cost was devastating. Lifetime employment ended as companies shed workers. Salaries fell 30%. Young people, seeing their parents' destroyed dreams, rejected property ownership entirely. The herbivore generation emerged. Minimalist, risk-averse, propertyless. Corporate Japan never recovered its swagger. Banks became zombies, unable to lend. Innovation stagnated as companies focused on survival. The nation that seemed poised to dominate the 21st century retreated into deflation. The wealth concentration was extreme. Distressed properties were acquired by international funds and surviving domestic elite. The middle class became permanent renters in the nation they had built. Technology leadership couldn't prevent the pattern. Speed of collapse accelerated. Modern communications spread panic instantly. Electronic trading made sell-offs instantaneous. Complexity increased fragility. 3 collapses. Same pattern. Accelerating speed. Spain. 80 years to build. 12 years to collapse. Britain. 40 years to build. 3 years to collapse. Japan. 20 years to build. 900 days to collapse. Each believed they were different. Each followed the pattern to destruction. Now let's see where America stands in 2025. Spoiler. We're already in stage 5. Now let's examine American housing in 2025. The evidence is overwhelming and the conclusion undeniable. We're deep in the pattern that destroyed Spain, Britain, and Japan. 3 times. 3 collapses. Same 7 stages, each faster than the last. And America? We're racing through the stages at unprecedented speed. Every warning sign is flashing red. Every metric screams danger. Every historical parallel points to the same outcome. Yet we celebrate record prices like Spain celebrated its golden flood, like Britain celebrated its empire wealth, like Japan celebrated its permanent prosperity. Here's the truth that should chill every American family. We're in stage 5 of 7, the false peak, the last moment of euphoria before the avalanche. Stage 1, the golden flood. Check. America's golden flood came from the Federal Reserve. Since 2008, they've printed $9 trillion. 0 interest rates for a decade pushed money into property. Foreign investment added fuel. Chinese buyers alone spent $200 billion on US property. Like Spanish silver, printed dollars flooded housing. Money supply increased 40% from 2020 to 2024 alone. That money needed somewhere to go. Property became the destination. Prices responded predictably, up 50% nationally since 2020. The flood was deliberate policy. The Fed wanted asset inflation. They got it. Now American families face the consequences. Stage 2. Speculation fever. Check. Corporate landlords now buy 30% of homes in some markets. Invitation homes, American Homes 4. Rent. Wall Street owns entire neighborhoods. They're hoarding housing like Spanish nobles hoarded palaces. Airbnb turned homes into hotels. BRRRR strategies. Buy, rehab, rent, refinance, repeat, spread through YouTube. House flipping shows made speculation entertainment. Everyone became a real estate investor. The fever metrics are staggering. Cash offers reached 30% of transactions. Waived inspections became standard. Blind bidding wars pushed prices 20% over asking. Speculation worse than British building societies, more widespread than Japanese salarymen. Stage 3. Affordability crisis. Check. The numbers are brutal. Median home price, $400,000. Median income, $50,000. That's 8 times ratio. Historical norm is 3 times. First-time buyers need $100,000 down payment plus closing costs. The middle class is priced out. 55% of adults under 30 live with parents, higher than the Great Depression. Rent consumes 40 to 50% of median income in major cities. Teachers, nurses, firefighters can't afford homes in communities they serve. Birth rates hit record lows. Young families delay children because they can't afford space. America is failing to reproduce itself, just like Spain in 1600. Worse than Spain's 500% increase because wages stagnated while prices soared. Stage 4. Debt trap. Check. Mortgage debt hit $12 trillion. Unprecedented in human history. But traditional mortgages aren't enough anymore. Ninja loans. No income, no job, no assets are returning. Adjustable rate mortgages resurged from 3% to 15% of originations. 40-year mortgages are now proposed to make payments affordable. Like Japan's 3-generation loans, we're extending debt burdens to maintain unsustainable prices. Home equity extraction hit decade highs despite rising rates. Families borrowing against paper gains. The sophistication exceeds British building societies. Rocket mortgages, better.com. Algorithms determine your debt capacity in minutes. More sophisticated than British building societies, more dangerous than Spanish censos. Stage 5. False peak. We're here, now. This is where we are right now, celebrating at the cliff's edge. Despite 7% mortgage rates, prices hit records in 2024. Media celebrates the resilient housing market. Government officials proclaim a soft landing, but cracks are showing. Inventory builds in former hot markets. Price cuts reach 30% of listings. Transaction volume down 40% from peak. Builders offer massive incentives. The smart money is already moving. Phoenix, Austin, Boise, pandemic darlings, see 10% plus price drops, but the narrative remains bullish. Temporary adjustment, experts claim. Spring bounce coming. The same delusion that gripped Spain, Britain, and Japan. Early warning signs multiply. Mortgage applications hit 30-year lows. All-cash investor purchases decline. Airbnb occupancy falls. The peak is false, built on momentum and denial. Stage 6 approaches. Stage 6. The catalyst event. Coming next. What triggers America's Stage 6? History suggests multiple possibilities. Commercial real estate collapse could spread contagion. Office values down 40% already. Regional banks hold concentrated exposure. One major failure could freeze lending. Mass tech layoffs, 500,000 jobs lost already, could accelerate. These high-wage workers drove pandemic price surges. Their disappearance removes crucial support. Credit event in China, Europe, or emerging markets could trigger capital flight. Global interconnection means foreign crises become domestic reality overnight. Timeline? Historical patterns suggest 12 to 24 months from false peak to catalyst. We entered Stage 5 in mid-2024. That puts the trigger window in 2025 to 2026. Stage 7. The avalanche. The end. When Stage 7 arrives, historical patterns project 40 to 60% nominal price declines in bubble markets. Mass foreclosures follow. 5 to 10 million families could lose homes. Private equity waits with cash to buy distressed properties, completing wealth transfer. The middle class becomes permanent renters in the nation they built. Just like Spain, just like Britain, just like Japan, but faster. But the evidence doesn't stop there. Look deeper, and the pattern becomes undeniable. Private equity firms now own 300,000 plus single-family rentals. Blackstone alone owns 80,000 homes. They're creating corporate feudalism. You'll own nothing and rent everything. Chinese capital flight into US property reached $150 billion before restrictions. That money is trapped, waiting to flee at first opportunity. When it moves, watch out. Mortgage fraud reports up 300% since 2020. Appraisal inflation, income falsification, straw buyers, all the 2008 tricks returned. But this time with algorithmic efficiency. Cash-out refinancing hit $300 billion annually despite rising rates. Americans extract equity like Spanish nobles sold silver, desperately converting paper wealth to cash. Adjustable rate mortgage share rising fastest since 2005. When rates reset, payment shock follows. Wall Street packages rental income into securities like mortgage-backed securities 2.0. The pattern is accelerating faster than Japan's collapse. Every indicator screams danger. Yet, we party on. What would stage 6 look like for American housing? The catalyst could emerge from multiple sources simultaneously. Regional bank failures from commercial real estate exposure, mass arm resets causing payment shock, forced selling by underwater recent buyers. When it starts, it accelerates. History shows housing collapses gain momentum. Each foreclosure pressures neighborhood values. Each price cut forces comparable sales lower. Psychology shifts from greed to fear overnight. Stage 7 projections based on historical patterns. 40 to 60% price drops in bubble markets like Phoenix, Austin, Miami. 30 to 40% in secondary markets. 20 to 30% nationally. Mass displacement follows. 5 to 10 million foreclosures, conservatively. Corporate consolidation accelerates. Blackstone and peers deploy hundreds of billions buying distressed properties. The middle class loses homes to become renters from corporate landlords. Wealth concentration reaches feudal levels. Timeline: if patterns hold, 18 to 36 months from trigger to bottom. Faster than Japan's 900 days because technology accelerates everything. Panic spreads at internet speed. Selling happens electronically. Algorithms amplify volatility. Spain thought gold made them immune. Britain thought empire protected them. Japan thought technology exempted them. All three believed their wealth was different, permanent, special. All three followed the pattern to destruction. Golden flood, speculation, fever, affordability crisis, debt trap, false peak, catalyst, avalanche. 7 stages, same sequence, accelerating timeline. America believes it's different, exceptional. The pattern says otherwise. Math doesn't care about American exceptionalism. 3 housing collapses spanning 400 years, each following identical patterns, each destroying middle-class wealth, each concentrating property in fewer hands. Spain's 80-year bubble built on New World gold, Britain's 40-year speculation fueled by imperial extraction, Japan's 20-year mania driven by export dominance. Same 7 stages, same outcome, middle-class wealth destroyed, property concentrated among elite. America in 2025. Already in stage 5, the false peak. Federal Reserve money printing created our golden flood. Corporate speculation fever rages. Affordability crisis locks out young families. Debt trap ensnares millions. We're celebrating at the precipice, just like our predecessors. Each collapse happened twice as fast as the previous. Spain built over 80 years, collapsed over 12. Britain built over 40 years, collapsed in 3. Japan built over 20 years, collapsed in 900 days. America, on track for 10-year build, 18-month collapse. Why the acceleration? Technology doesn't prevent the pattern. It amplifies it. Digital markets move faster. Algorithmic trading accelerates sell-offs. Social media spreads panic instantly. FOMO builds faster. Fear spreads quicker. If the pattern holds, and it's been undefeated for 400 years, stages 6 and 7 arrive before 2027. The catalyst could emerge tomorrow or next year. But it's coming. Maybe the Fed engineers a true soft landing. Maybe AI productivity miracles rescue the economy. Maybe demand stays elevated forever from immigration. Maybe this time really is different. But 3 empires thought the same. 3 times the pattern won. The Spanish had gold, the British had empire, the Japanese had technology. All thought they were special. The pattern is undefeated. Math doesn't care about American exceptionalism. Gravity doesn't suspend for US housing. If this opened your eyes to where we are in the sequence, subscribe. When stage 6 triggers and stage 7 begins, you'll want to understand what's happening in real time. The pattern is accelerating. The next 24 months determine everything. Don't be blindsided by history. The pattern always wins.